The external environment has improved since the last MPC meeting, as global economic activity remained resilient in the second quarter of 2024. Growth was supported by private and government spending, a resilient services sector, and declining oil prices. Additionally, the anticipated policy easing cycle initiated by major central banks in advanced economies in response to declining inflation rates have also been supportive of growth. These conditions are favorable for the domestic economy. The domestic economy continues to recover, evidenced by the stronger than expected GDP outturn for the second quarter of the year. Growth in the second half of the year is also expected to be firm, supported by sustained activities in the construction sector, consumption of goods and services by households and firms, exports of gold and crude oil production, as well as banks' extension of credit to the private sector. The external payment position continues to improve, characterized by higher trade surplus and strong reserves buildup. Notably, the robust growth in gold exports has helped to improve the trade balance and international reserves, complemented by external financial inflows from the IMF and the World Bank. These together have contributed to an improved balance of payments position in the first half of 2024. Looking ahead to the end of the year, the balance of payments is projected to achieve a surplus, driven by increased exports, stronger remittance flows, and lower government external payments. In the assessment of the committee, preliminary data since the last MPC meeting held in July 2024 indicates that macroeconomic conditions have generally improved. Headline inflation has eased and growth has picked up. Fiscal policy implementation has been robust, providing impulse that is supportive of growth, while monetary conditions have remained tight and supportive of the disinflation process. Headline inflation since the first quarter has declined for the fifth consecutive month by 5.4 percentage points. Core inflation has also declined sharply over the same comparative period by 6.9 percentage points. These trends suggest that the disinflation process is on course. The latest forecast showed that the inflation will continue to ease towards the range target of 13 to 17% for the year and steadily track back towards the medium-term target of 6 to 10% by the end of 2025, bearing unanticipated shocks. At the current juncture, the committee judged the risks to inflation outlook as fairly balanced. Given these considerations, the committee decided to lower the monetary policy rate by 200 basis points to 27%.